Hi everyone, today we talk about Tesla stock, which has had an awful run over the last few days. It is one of the stocks which has been absolutely killed over the last few days, and the stock is down huge. And analysts are coming out everywhere to jump on this and go, this stock is absolutely atrocious. All the price targets are getting absolutely cut. We had one analyst come out the other day and saying that the Tesla stock is going to go down to $10 a share. And it's just not looking good at overall for the stock with the amount of analysts that are coming out and actually criticising this stock right now. So I'm going to get into Tesla, talk about what's going on with the stock, what's causing it to go down, everything like that about Tesla stock. And then if you don't know, because it's your first time watching my videos, I am currently a shareholder in Tesla. I do currently hold a few stocks or shares into Tesla right now. So Tesla has pretty much been hurt because of cuts saying that they're not going to hit targets, the China trade war pretty much affecting the stock, that China sales are going down quite a bit. There's a few general reasons about Tesla why it's caused the stock to go down, but nothing like actually major going, that's concrete why the stock's going to go down. And that's led to many analysts downgrading the stock. Now, the prime example of analysts that downgraded the stock the other day is that analysts came out and saying that the worst, and this was the headline on CNBC just to make it a little bit worse than what it was, is that Tesla stock could go down to $10 a share. Now, when you look at that analyst right there, they actually said the stock could go down to $10 a share in the bear case scenario. A funny thing is, they said that the main target still, or the medium target, was still at $230 a share, but the bullish case is that the stock could actually go up to $320 a share. Now, if you want to know how much analysts can pretty much bullshit out of the backside, or how wrong they can be and how much they kind of just jump on the bandwagon and see, oh, that stock's going down, we're going to have to downgrade this stock to make us not look stupid, or a stock's gone up 50%, so we're going to have to upgrade the stock so we don't look stupid because the stock's gone past our price target. This is a prime example of an analyst pretty much just bullshitting and blagging the way through, which they're really good at. So if you look at analysts right here, $10 a share, $230 a medium share, $320 a bullish case. Now, let's just compare this to something very similar. That's pretty much going into a sporting event like Deontay Wilder versus Tyson Fury. Best or the most common scenario here is that it's very close, so we're going to call it a draw. So what I'm going to do is I'm going to put $5 or £5 on a draw. But you know what? There's a chance that Deontay Wilder could win. So I'm going to put £5 or $5 on Deontay Wilder to win. But as well as that, there's also a chance that Tyson Fury could go in. So you know what? I'm going to put £5 or $5 that Tyson Fury can go in. So I'm going to have £5 on Deontay Wilder, £5 on the draw, and £5 on Tyson Fury to win. And then one of them wins, or the draw happens, and they go, you know what? I told you that could happen. I told you that he was going to win, or I told you it was going to be a draw. And it's like, you know what? You've just basically covered all cases scenario, and then when it comes out in that case scenario, you go, I told you that was going to happen. And this is exactly what's going on with analysts right now. They have no clue. They just kind of follow market trends, and they go, oh, I'm going to have to do this here because this has gone in this price and we can't look stupid. And there's this analyst that come out right now and gone, you know what, we're going to cover all bases. So if the company struggles, we said it was going to go to $10. If it says that, you know, in the next 12 months, you know, it could do okay. It's not going to go down. It's not going to explode. So we're going to say $230, and the stock could do absolutely amazing in the next 12 months. So we're going to cover that ground as well. And it's just absolutely stupid. So when you see analyst rating, honestly, it's best to avoid it because they just make stuff up, just try and cover themselves and make themselves in glory when a stock goes that way. Obviously, the China trade war is affecting a lot of stocks, but when we look at JD.com, Alibaba.com, all these companies that are going to be affected by this China slowdown, this China trade war, and these companies, JD, Alibaba, come out and they've absolutely smashed earnings. So, you know, when you look at a strong company, this China trade war business, it hasn't affected the companies at all. So it's just kind of a bigger ploy at the moment. You know, the stock market goes in cycles. It goes up, it goes down. And at the moment it's going down. It's dropping from these prices that have been, I'd say, like overvalued or fair valued. And it's now coming into a better cycle where they're a lot more cheaper. And it makes them buying opportunities. It's just a cycle of stock market overall. And the China trade war won't affect Tesla that much. What's going to happen right now is, in case you don't know, Tesla are making the Gigafactory over in China, which means they can produce cars in China instead of importing them over from America. Now, if you imagine the amount of money they're going to save from importing cars all the way over from America to China to sell them, the amount of fees that they've got to put on them cars to make money is just crazy. You know, you're talking $10,000 that they're having to put on them cars to sell them in China. When that gigafactory gets up and running, the prices in China are going to be slashed, and then the car sales are going to go up. So obviously the China sales are going to go down over the 6 months, because anyone with half a brain is going to be going, you know what, if I wait 6 months and get a Model 3, I save myself $10,000. That's what everyone in China is doing, so that kind of side of it is trash as well, to be honest with you. Now, because of all that, the stock is down at 2.5 years lows. Now, when I always look at 2.5 year low, I always think about all the people that have sold out in them 2.5 years have now lost money. You know, all them 2.5 years, if you bought above the point of what the stock is right now, all them people have lost money. And there's only a certain amount of people that are left in the stock that are going to be stupid to sell this stock right now. You know, all them panic, all them nervous sellers are selling out of them positions. And eventually we're going to hit the true longs in Tesla. And that's when the stock bottoms, and we'll see it go up from there. Like, I think we're personally near the bottom of the stock right now. When we look at the 2.5 years low, let's just put this into context. So, the revenue side of it has grown 207% in 2.5 years. When we look at the EPS has grown 53% in 2.5 years. Now, if you're telling me that Tesla's on the wrong tracks, look at these figures right here. 207% revenue and EPS 53%. Now, there's obviously a little bit of difference because Tesla have invested quite heavily into the infrastructure of the company and trying to grow it, which is what any sensible company would do. That's how Amazon have got into the position right now. Every successful company has had to reinvest the revenue to grow the EPS in the long term and to grow the revenue as well. So it's just a simple thing of the company doing it. And when we look at the future of the company of Tesla, you know, they're head and shoulders at the moment above in the electric game. And the amount of sectors that they're getting into is absolutely amazing. So Tesla overall is at a great bargain right now, in my opinion. Now, I currently hold shares in Tesla, and I do kind of regard Tesla as like a speculation stock, where I'm kind of like not investing heavily into the stock. It does make up below 10% of my portfolio. But I believe that in the long term of Tesla and the potential of the electric car market, the number one threat to humankind right now is global warming and pollution. One of the biggest factors of global warming and pollution is the amount of cars that we are using. The one solution to that is to have electric cars, and when we look at a major disruptor in that sector right now is Tesla. Tesla can disrupt that sector so much. It's head and shoulders above a lot of them competitors, and it can solve one of the biggest problems that we currently face right now in the world. So when we look at that, it is massive potential that Tesla has, and I think it's at a good price right now. Personally, I won't add any more into it because I don't want it to go past the 10% mark. But I think when you look at Tesla's stock, it's been beaten down badly, and I can't see too much for it to go down anymore. You know, we look at stocks, they have a downtrend, and then eventually we hit a waterfall drop. And when we hit the waterfall drop, that's normally tend to where we get a bottom of a stock. So it should be a good time to buy anytime soon, hopefully. But I don't want to speculate and say that this is exactly the bottom, but we should be getting there anytime soon. So if you were invested into Tesla or looking into Tesla, I hope this video helps you. Please give it a like, subscribe, and I'll see you in the next video.